Welcome LML for 807 students to this online lecture. In this online lecture, we will address the reversal of EFTs. The content of this lesson is found on page 142 to 145 of your study guide. We will consider the reversal of electronic fund transfers or EFTs in light of South African case law. Where a customer makes a deposit into his bank account or a third party makes payment into the account, the bank is obliged to pass a credit entry in the customer's favor. The general principle, as you can see on the slide, is that when the bank unconditionally credits the customer's account, it is obliged to account to the customer for this amount on demand and may not reverse the credit entry without the customer's consent. However, the act of crediting a customer's account does not in all circumstances create an absolute duty on the bank, as in some instances a credit entry can be validly reversed. So the question arises, under what circumstances can electronic fund transfers be reversed, or also referred to as truncated or countermanded? We will be considering South African case law relevant to the reversal of EFTs. The case law relevant to the reversal of EFTs are as follows: Take and Safe Trading versus Standard Bank, Nissan South Africa versus Monets, Pastana versus Nedbank, and Nedbank versus Pastana, and lastly, Exokia versus First Rand Bank. Please note, LML for 807 students, that the case of Exokia is not prescribed and you will therefore not be examined on it. However, it is included in this lesson merely to keep you updated on the latest case law. Now let's consider the case of Take and Safe Trading versus Standard Bank. In this case, the Standard Bank claimed payment for the amount of approximately 10 million rand from Take and Safe Trading, who are referred to as the CC. And two other defendants, among them was one Mansour, who was a surety and the only member of the CC. As both the CC and Mansour were both valued clients of the bank allowed them to draw against uncleared checks and pay third parties by means of EFTs. Mansour was responsible for electronic banking facilities of the CC and was also in control of a Nedbank account of A. Mohammed trading as highway distributors. Mansour drew checks totaling just under 10 million against highway distributors' account and deposited them at an ATM on the 9th of August 2001, which was a public holiday, into the CC's account. Directly thereafter, Mansour electronically transferred a similar amount of just under 10 million from the CC's account into the banking account of Metro Cash and Carry as consideration for cigarettes purchased by the CC. Upon receipt of the payment, Metro released the cigarettes to Mansour. Not long thereafter, the checks of highway distributors that Mansour had deposited into the CC's account were dishonored due to a lack of funds. Mansour was advised that the checks had been dishonored, and he then instructed the bank to reverse the electronic payment made to Metro. While the bank was complying with this instruction, Metro objected to the reversal as they had provided Mansour with 10 million rands worth of cigarettes. The bank then refused to comply with Mansour's instruction to reverse the EFT made to Metro. The legal issue that arose was that the court had to determine whether a bank may reverse, on the transferor's instruction, in other words Mansour's instruction, the payment or credit entry made to Metro without Metro's consent. The court held in its decision that once an amount was transferred by Mansour to the credit of Metro's bank account, the credit belongs to Metro and the bank cannot on the instructions of Monsieur, retransfer it without Metro's consent. The court considered the transfer to be a valid transfer of funds. The court came to this decision as in the quota quo, the bank's witness testified that an interbank agreement under the auspices of the Automatic Clearing Bureau, or ACB, exists that provides that without the beneficiary's consent, an EFT cannot be reversed. The SCA confirmed the finding of the quota quo that once money is transferred by A into the account of B, the money or credit belongs to B, and the bank has to keep it at B's disposal. The credit can only be reversed with B's consent, so Metro's consent is required for the money to be transferred back to Monsieur, which, as in a set of facts, Metro did not give consent. The bank was correct not to allow Monsieur's instruction. Now let's consider a case that followed. Nissan South Africa versus Marnitz. This case involved an erroneous transaction. First National Bank, FNB, intended to transfer an amount of 12.7 million on the instruction of its customer Nissan from Nissan's account to the account of TSW, which was held at Standard Bank. However, the account information provided to FNB was incorrect, so FNB transferred the funds to a wrong payee known as Maple, who, like TSW, held an account at Standard Bank. Maple became aware of the large sum in its bank account and shifted the money between its own banking accounts and ultimately utilized the money for the conducting of the day-to-day business of Maple. About 20 days later, Nissan realized that the funds were transferred erroneously and requested Maple to pay back the money transferred. Directly thereafter, Maple was liquidated. The legal issue in Nissan was as follows. The court had to determine what the consequences were of mistakenly transferring money to an incorrect bank account. The court was not required to decide whether it is permissible for a bank to unilaterally reverse a transfer without the consent of the recipient. However, the obiter comments in Nissan suggest that such a unilateral reversal is indeed permissible in the case of an invalid transfer of funds. The court failed to provide any guideline on what would qualify as a valid as opposed to an invalid transfer of funds. So the issue that arose concerned the consequences of someone mistakenly transferring money to the incorrect bank account. In the decision of the court, they needed to answer to the legal issue. It was held that when A mistakenly transfers money to the account of B, B will not be entitled to the money in its account. The withdrawing of money mistakenly transferred to a bank account to use for its own purposes would amount to appropriation and theft. The court in Nissan distinguished the issues from that in taken safe trading. It held that in taken safe trading, the court was dealing with a valid transfer of funds from Monsieur's account to Metro's account for payment of cigarettes. It concluded that the transfer in taken safe trading could thus not be reversed without the consent of Metro. However, in Nissan did not deal with a valid transfer of funds. The court also disagreed with the liquidator's submission that once a bank has unconditionally credited the customer's account with an amount received, the bank is required to pay the amount to the customer even when the latter has received the amount by way of fraud or theft. The court agreed with Nissan's argument that if stolen money is paid to the thief's account, the thief has little entitlement to the credit paid. as it would have in the case of actual notes and coins paid into the bank account. In that case, ownership of money does not pass from A to B. As a result, any credit entry erroneously made may be reversed. Based on the facts, the court came to a conclusion that as F&B intended to pay TSW and Standard Bank intended to receive payment on behalf of Maple, there was no meeting of the minds. As there was no meeting of the minds, Maple was therefore not entitled to the funds credited to its account. The liquidators were ordered to repay the money to Nissan. Now let's consider the case of Nedbank versus Pestana. On the 4th of February 2004 at 8:44 a.m., Nedbank's head office was appointed as an agent in terms of Section 99 of the Income Tax Act 58 of 1962 by the South African Revenue Service, or SARS. SARS informed the Nedbank head office to collect funds on behalf of SARS from a customer's account, a Mr. Joseph Michael Pestana, who I will refer to as the first Pestana. The first Pestana owed SARS more than 340 million rand, and he had an account with Nedbank with a credit balance of nearly 500,000 rand at that time. At 11 a.m. on the same day as the instruction from SARS, Pestana instructed a Nedbank employee at the Carletonville branch to transfer the sum of 480,000 rand from his account to that of Jose Manuel Pestana, who I'll refer to as the second Pestana. The Carletonville branch of Nedbank acted upon the instruction of the customer, the first Pestana, and transferred funds to the account of the second Pestana. Later that day, the Carletonville branch of Nedbank received the SARS collection notice from the Nedbank head office and reversed the earlier transfer of funds without the consent of the respondent. The second Pestana, the respondent, instituted action against Nedbank to transfer the funds back to his account. The basis was that Nedbank had acted without his express authority or instructions when it reversed the credit. The legal issue in Pestana was that the court had to answer whether the bank was entitled to reverse a credit transfer without the authority from the recipient of the funds. Firstly, the decision of the full bench on appeal held that if the bank either made payment or credited Jose Manuel Pestana's account unconditionally, the bank could not unilaterally reverse the credit. There were no facts placed before the court which suggested that Jose Manuel Pestana knew or ought to have known that his account was mistakenly credited. The court found that when Nedbank intended to make payments unconditionally on behalf of the first Pestana, Nedbank had to have intended to accept payments unconditionally on behalf of the second Pestana. Therefore, the bank could not unilaterally reverse the credit. Thereafter, the SCA confirmed the decision of the full bench on appeal. The SCA found that the decision of the Carletonville branch to transfer the funds to the second Pestana was not erroneous. The court found that if there is no legitimate reason for the bank to reverse the payment of funds, the general rule remains that once the funds were transferred by a bank, the credit belongs to the recipient of those funds, and the transferring bank must ensure that the funds remain at the disposal of the recipient. The transferring bank is not allowed to retransfer the funds back into the account of the person who originally gave the instruction for the funds to be transferred without the consent of the recipient of the funds. Even though the branch accepted a mandate from the customer to transfer funds after the head office of the applicant bank received the SARS collection notice, the court held that until the branch also received such notice, that the Carltonville branch was entitled to continue its ordinary everyday banking functions. Therefore, the Carltonville branch of the applicant bank was entitled to act upon a valid and lawful mandate from the customer, directing them to transfer funds to the respondent. Further, the fact that the Carltonville branch changed its mind did not undo the validity of the transaction already completed by it. Lastly, let's consider the case of Exsecure versus First Rand Bank. The facts in Exsecure are as follows. Exsecure claimed that First Rand Bank transferred an amount of about 623,000 Rand from its account unlawfully and without its consent. Exsecure was a signatory of Likanile Trading Enterprises' bank account, and both were customers of First Rand Bank. I'll refer to Likanile Trading Enterprises as LTE. In terms of a business project, Exsecure was allowed the right and ability to operate LTE's bank accounts electronically, as it planned to transfer amounts from LTE's account to its own to reimburse itself for services rendered in terms of a subcontract. This right to transfer such amounts was dependent on certain payments being made by the City of Cape Town into LTE's account. LTE requested First Rand Bank to stop a transfer made by Exsecure due to suspected fraud. Exsecure had transferred an amount of just about 623,000 Rand from LTE's account without the payment having been received from the City of Cape Town. First Rand Bank stopped the payment before it was finally credited to Exsecure's account. First Rand relied on a clause of its banking agreement that provides that in the case of fraud, suspected fraud, or if it's compelled to do so, it reserves the right to freeze or close the customer's account and or to stop a service without notice. The court in Exsecure had to decide whether a credit may be validly reversed by a bank. The court listed a number of instances where a credit entry may be reversed, including where a client came by the money by way of fraud or theft. The court found that the general principle that was confirmed in Pastana, that a bank may not reverse a credit to a customer's account without the customer's authority, did not apply in the present case. This is because a senior bank official of First Rand testified that the credit entry was treated as conditional in terms of the standard banking processes, as the transaction was done after 8 o'clock in the evening online. Before the credit entry could be made final, LTE informed First Rand Bank that the transfer was fraudulent and succeeded having it placed on hold. Further, Exsecure raised a defense that if found that the amount was never transferred out of LTE's account and into Exsecure's account, First Rand was stopped from relying on such a fact for various reasons. The court held that whatever representation was made, it was not made by First Rand. The defense of estoppel was therefore dismissed. Exsecure's claim was dismissed. As you can see from the case law discussion, certain aspects regarding the reversal of EFTs are settled, but there are open-ended issues which have not been fully addressed by case law. I will mention a few aspects that have not been settled by case law. In taken safe trading, the expert witness testified that the interbank agreement prohibits the reversal of an EFT unless the recipient of the money consents to it. The fact that this agreement is confidential and therefore not open to public scrutiny is not practical. Further, the court made an assumption that in the absence of an interbank agreement, a bank cannot be expected to retransfer an amount transferred by A into the account of B back into the account of A without B's consent. This could not be correct, as the consent of the recipient should not be required if he was not entitled to such transferred funds in the first place. In Nissen versus Munitz, the main question related to whether the transferee obtained a valid title to the amount transferred to them, and the court distinguished between a valid and an invalid transfer of funds. Unlike in Take-N Safe, the case of Nissen was not dealing with a valid transfer of funds. A valid transfer of funds would require the consent of the recipient of the funds. The court, however, did not provide a guideline that would qualify as a valid transfer of funds, as opposed to what would qualify as an invalid transfer of funds. Now let's consider the case of Pestana. On appeal to the SCA by Nedbank, the main question asked was whether a complete transfer cannot be retransferred under any circumstances. As indicated, the court highlighted instances where the court may reverse the transfer of funds, such as where there is fraud or theft, or where the funds were erroneously transferred. The court thus indicated that although entries in the bank's book constituted prima facie evidence of payment, it may look beyond the entry to find the true state of affairs. However, the comments made on the aspect of fraud were merely obiter dicta, as the case did not directly deal with fraud. In the case of Execure versus FirstRand Bank, the credit transfer was not finalized. There is no real clarity to know exactly when a transfer is finally credited to the recipient's account. Further, in Execure, both Execure and LTE banked at the same bank. Clarification is needed to know whether the credit transfer can be reversed in the case of fraud if the parties are not clients of the same bank. Regardless, the decision in Execure is welcomed, as the court confirmed that a provisional credit entry can be reversed where there is an allegation of fraud against the recipient of the credit entry. This brings us to the end of today's lesson. Very importantly, please do read the case by yourself and make your own detailed summaries. The purpose of this lesson is just to provide an overview of the case law, but for examination purposes, you are to please study the cases and commentary on the cases in more detail. We wish you well with your studies.